Competition intensifies, but MELI does not give a fuck. Ciao guys, welcome back to Lorenzo 2 Cents podcast. This is an update for Mercado Libre after Q3 earnings. And while investors sold in the second part of the year 2025 MELI, even though it ended the year positive, but they sold MELI, I think, amid worrying that competition intensifies. I think this is the first factor, then there are others maybe. But MELI actually gained market share in Q3, in particular in Brazil, where there is the toughest competition. Brazil and Mexico, but Brazil is the first country in Latin America where everyone is going, Amazon, C, and so on. And so what they did, they played for the chess. So they did a very aggressive move. They lowered the free shipping threshold from 79 to 19 real. That is about 19 real is about $3.50. And this is a 75% reduction. So sure, this had an impact on the margin that went down, but it had a surge in buyer accessibility and marketplace activity. So I will give you some number here. The number of merchants making sales in this range grew at a double digit year over year, while new listings in that range grew 3x. This is on the merchant side. And again, this is a quote from the management. The lower free shipping threshold is attracting more buyers and enabling sellers to turn their traffic into higher sales. This in turn creates a powerful flywheel of supply and demand. And you know, guys, you that you follow me, you know how much I do like flywheels. So some results. Items sold in Brazil rocketed from 26% year-over-year growth in the prior quarter to an impressive 42% this period, while gross merchandise value and buyer metrics, conversion, retention, and purchase frequency also sharp upticks. So all in all, this impact was very impressive. This was a bold move they did, and I think they did good because they gained market share. On the other side, on Mercado Pago, the Fintech arm, they saw the credit card maturing, enhancing profitability and user engagement. I think they said that the 2 years cohort, this is valid not only in Brazil, but I think broadly in the region, became profitable. So they are there, that they are seeing more and more credit cards becoming profitable in Brazil. And another move, they amplified its MELI Plus subscription program. So basically, they on the same threshold that we were saying, while non-members have free shipping, members of MELI Plus have free shipping but fast shipping, so 1-2 days on this low value. And here again, guys, this is of course putting pressure on margin and even on the logistics, but they handle it very, very well. And all in all, they made more money for this than what they lost. Then they launched MELI Plus Mega is super bundle that is bundling together Disney Plus, Netflix, HBO Max, Apple TV. So they are creating this big distribution surface that is giving them more and more edge against competitors that do just e-commerce or that do just fintech. Think about Amazon or think about Nubank, right? So this is exactly the core of my thesis, that MELI will be the biggest fintech in the region thanks to its broader distribution ecosystem. So they basically push very hard on margin on the commerce part to gain users, market share, and then they upsell the fintech product. I think this is what is making MELI bigger and bigger, and will keep making them the leader in the region. So a few words about Argentina. Even Argentina, that is and was and still is considered a risk market, and I think this is also what is keeping the valuation low. Actually is a big edge for MELI, because they are the only one that knows how to navigate and handle that market. And even though there have been macro drops in the last months, such as election-related instability, rising interest rates, consumption pressures, Mercado Libre has turned what many investors viewed as a risk in its thesis into a clear competitive advantage. And I even give you some number here. Growth in Argentina remained resilient. This is a quote from the management. In Q3, despite a challenging macro backdrop, with sold item up 34% year over year, 44% FX neutral, the GMV grew. And even other numbers. Revenue climbed 39% in US dollar, 97, so basically they doubled in local currency. And the credit portfolio doubled with healthy metrics and non-performing loans. So they are crashing that market, guys. They are doing very, very well, and Argentina is becoming more and more important. They keep investing. They opened a second fulfillment center in Buenos Aires. They launched fee-free credit card among their competitors that all charge a fee for credit cards. So they are really gaining the world market there. And finally, they added drop shipping from China. So they are investing a lot. Guys, I think despite all these headwinds in Argentina, they are doing good. Could Venezuela maybe be the next big bet for Mercado Libre, given what is happening? Who knows? We will see. So, takeaways and performance of my portfolio. So Mercado Libre had another great quarter. They saw revenue jumping 39% in dollars, in constant currency, 49% without currency changes. So it's a lot, guys, for a company at this stage that should be mature at this point, even though the market is far from mature, but they are there for decades now. So given this, consider that MELI is printing 8.6 billion of free cash flow and growing 39% year over year. You would apply as minimum, conservatively, a 30x multiple, P to price to free cash flow, to this number, and you get 258 billion market cap. Today's MELI is 100 billion market cap. So I leave it to you to do the math. And of course, guys, this is the right time to say this is not financial advice, right? I don't know your situation. This is just for entertainment and informational purpose. So do your own research and due diligence. But for what concerns me, I'm very happy in holding this position. And by the way, deep dive to date, since when I published my article, you can find it timestamped on my Substack, lorenzo2cents.com, and I opened the position. I'm losing 24%, but not a big deal. So I conclude by saying that MELI is doing exactly what I expect them to do. So they are lowering gross margin. Look at here. You have from mid of 2023, from 50% gross margin, they now went to 45%, all the way down. This is exactly what they need to do to crush competitors, while they are increasing the free cash flow. And if you look at the free cash flow per share, is the same situation, because they are actually not diluting anything. I'm not sure if they are doing buyback or not, but they are not diluting, at least in the last years. And guys, do your own research and let me know what you think about MELI. And until next time, ciao.